Hi everyone, I'm Megan from AIA Investment Management. Welcome to this edition of our fortnightly video update, where I'll be sharing the latest global market highlights and key investment messages to help you navigate today's evolving market landscape. Let's begin with market performance. Global markets started June on a strong footing. Major indices like the S&P 500, MSCI World and MSCI Asia Japan delivered solid gains. The S&P 500 crossed the 6,000 mark for the first time since February, reflecting improved investor sentiment as trade tension eased and economic data remains supportive. Moving to the key US economic data, the labor market remains resilient. Non-farm payrolls rose by 139,000, surpassing expectations. The unemployment rate remains unchanged at 4.2%, while wage growth accelerated with average hourly earnings, rising 0.4% month-on-month. These indicators reinforce the strength of the US economy. With resilient economic data and cooling inflation, this suggests Fed will keep interest rates steady for the time being. Moving to some of the key market updates, trade negotiations between the US and China have re-entered the spotlight. President Trump and President Xi held a long-anticipated trade call on 5th June, with both sides agreeing to resume trade talks after recent stall-over accusation. The meeting, which began in London on Monday, 9th of June, aims to ease tension and rebuild momentum in negotiations. The US and Europe trade talks are also progressing and heading in the right direction. That said, uncertainties still remain. The US has doubled tariff on foreign steel and aluminium from 25% to 50% on 4th June, rising tensions with major trading partners. The temporary 90-day pause in tariff is also set to expire in July, adding caution to the outlook. Investors are expected to embrace volatility ahead. Meanwhile, in Europe, the European Central Bank has cut rates for the 8th time on 5th June from 2.25% to 2%, signaling a potential end to its easing cycle as inflation is to 1.9% in May, well below its 2% target level. So while short-term market sentiments has improved, the path ahead remains uncertain, and that is where a longer-term view becomes essential. Looking at this chart from Capital Group, it is showing the performance of the MSCI All Country World Index from 1987 to September 2024. Over the past 3 decades, we have seen numerous global crises like 9/11, global financial crisis, COVID-19, and multiple geopolitical tensions. Each of these events caused significant volatility, but despite these disruptions, the market has continued to recover and grow over time. In fact, investors who stayed the course through all these ups and downs would have earned an average annualized return of 9.8%. This reinforced the key principle of long-term investing. It's not about timing the market, but it's the time in the market. By investing early and staying invested, you give your portfolio the opportunity to grow and capture the full potential of the market cycle. So while short-term noises can feel very uncomfortable, this chart is a reminder to focus on your long-term goals and stay the course. At AIA, our stewardship approach is built to help you stay focused through market noises. By partnering with leading fund managers and offering globally diversified solutions, AI Stewardship helps manage risks and capture long-term opportunities. Furthermore, our active portfolio management allows our customers to stay invested rather than trying to time the market so they can benefit from full market cycle returns. Because ultimately, the greater risk isn't underperforming a benchmark, it is failing to reach your financial goals. As market evolve, staying informed and invested remains crucial, and AI Stewardship is built to support that discipline. Thank you, and we look forward to continuing this investment journey with you. Signing off now.